Glencore is to buy back as much as $1 billion of its own shares in a move that may soothe investor confidence after the company was hit by a US government probe earlier this week. The world's biggest commodities trader says the buyback programme will start today and last through to the end of the year. Remember, the DOJ is investigating the company on a number of fronts relating to money laundering. Let's bring in Will Kennedy, Managing Editor for Energy and Commodities here at Bloomberg. Good morning, Will. The timing's interesting, isn't it?
It is. So they had a disastrous day on Tuesday. The shares fell as much as 13%. It was the biggest one-day drop in 2 years. So 2 days later, this will clearly be seen as a signal, as an attempt to soothe investor nerves.
Would it have happened anyway at some point?
It might do. Glencore is having a very good year. We should remember the underlying business is strong, and in common with the whole mining industry, it's throwing up lots of cash. Rio Tinto, one of its biggest competitors, is in the process of buying $3 billion worth of shares. So, yes, they're well within their balance sheet metrics. It makes a lot of sense. But as we say, the timing is interesting.
How would a normal company deal with an investigation on this scale?
Well, it's too early to say. It's going to take many, many years probably for them to work it out. I mean, typically, you would look to some management changes, perhaps. Perhaps we don't want to say that before the investigation's over, but of course, management is complicated by the fact that the CEO is the second largest shareholder in the company. Ivan Glasenberg owns almost 10% of the shares.
Absolutely. Let's shift on to oil. Another Trump tweet last night, moving the oil price. Is the President of the United States having an effect on the oil market? Is he having an effect on the Saudis' desire to maybe turn the taps on a little bit faster?
Clearly, he's having an effect on the Saudis. The Saudis have shifted their policy position when it comes to the oil market very fast. I mean, we should remember that in the spring, they were willing to talk up the market and saying there's no need to open the taps, that prices can go higher, the world economy can sustain higher oil prices. And after Trump started tweeting, that's changed very, very fast, and the Saudis seem keen to make him happy. And they will increase production faster than perhaps other OPEC members would like. What hasn't been so effective is the price hasn't really responded, and that's probably because if the Saudis open the taps and send production to the maximum they can, the market's going to be very concerned about the lack of spare capacity in the world and its ability to absorb further supply shocks.
This may be a little bit of a red herring, but I wrote a piece this morning, and I think it came from a news organisation affiliated with the kind of more hardline elements. Actually, it's affiliated to the government in Tehran, but it may have affiliations more towards the sort of the more hardline elements. And I hear that the hardline elements in Tehran are maybe just getting a little bit more of an upper hand, and that was relating to the Straits of Hormuz. There's nothing in the price on this. How nervous will the oil market get about sort of geopolitical risks and in the Gulf? I
mean, clearly tensions are rising, and that since Mohammed bin Sultan became crown prince, since Trump became president, clearly tensions in the Gulf between Saudi Arabia and Iran have risen. And what's interesting about the oil market right now is there seems to be a politicization of oil. There seems to be a willingness in Riyadh to use oil policy as a way to put pressure on Iran, and that's new. For a long, long time under the previous oil minister, there'd been a real attempt to depoliticize oil. Now they seem willing to use oil as a political tool, and that all adds to the tension. And there will be some nervousness in the background that this could escalate into something more serious.